Welcome to the deep dive. Today, our mission really is to cut through all the noise surrounding Tesla. We want to get a clear picture of the strategic and operational challenges facing a company that, well, for a long time felt pretty unstoppable.
Absolutely. For the better part of a decade, Tesla wasn't just a car company, was it? It was revolutionary. Selling a vision, you had this visionary leader, seemingly unstoppable growth. It felt like the future.
But things might be changing under the surface. Our research, looking at a whole stack of analysis, points to something, well, different now. We're seeing a convergence maybe of strategic missteps, real financial pressures, and some tough questions about their core technology. Some sources are calling these fissures in its once impenetrable armor.
And that's what makes this deep dive so crucial, I think. We're not just looking at, a bad quarter here or there. We're investigating the structural integrity.
Yeah.
Are these cracks fundamental? We've organized this around 5 key areas, 5 potential cracks that could really define whether Tesla stays out front
Or becomes, as the analysis suggests, potentially just another car company, which would be a massive shift.
a massive shift. So what's fascinating is how these cracks, they're not isolated, they all connect. Looking at them together gives us that bigger picture. Is the core model still working? Let's dig into that foundation.
Okay, let's start with the first crack we identified. A product miscalculation. A pretty big one, it seems. We all heard the rumors, right? The anticipation for a truly budget-friendly Tesla. Something to open up the market.
Yeah, the idea was to broaden the base, bring more people in. So they launched these budget versions of the Model Y and Model 3 Standard here in North America.
But it didn't quite land as expected. In fact, the sources say it backfired spectacularly.
Right, the intention was value, but the perception, totally different.
People weren't just like unimpressed, they actively disliked them, calling them expensive and shabby tin cars, even tin shacks. Ouch.
And that points to the core strategic failure, doesn't it? They stripped out the very things that made a Tesla feel like a Tesla. The premium touches, the software experience, the connectivity, things that people felt justified the price premium over, say, a regular gas car.
So you got the badge, but not the soul of the card.
Pretty much. And the market reaction was swift. The stock dropped, what was it, over 4% on launch day alone?
Wow.
Yeah, that tells you consumers flat out rejected it. They didn't want a hollowed out version. They wanted the real Tesla, just maybe a bit cheaper. It shows a real disconnect, I think, between the company's strategy and what the market actually desired. Missed the mark on both budget and aspirational buyers.
Okay, so that product misstep, failing to deliver value at the lower end, that leads us right into the second crack, the financial health, specifically how it's being eroded by these constant aggressive price cuts. That used to be their power move, right?
It was. Keep the pressure on competitors, keep volume high. But now,
Now the sources are painting a different picture, describing it as drinking poison to quench thirst.
that's a stark metaphor. But it captures the desperation, maybe.
Mm-hmm.
A last-ditch effort to keep the factories humming, keep that scale needed to cover huge fixed costs, especially with competition ramping up.
And you can see the poison working, so to speak, in the financials.
Oh, absolutely. Look at the gross profit margin. Before 2023, consistently solid, right?
Yeah.
20-25%, luxury car territory.
Which justified that high-flying stock valuation.
Exactly. But then
Right.
it plummeted. First half of the year, down to just 16.81%.
13%.
And maybe for you listening, it's worth pausing on that. 16% is fine, maybe even good for a mass market company like Toyota. They're valued on volume, efficiency. But for Tesla,
Yeah.
valued as this high growth, high margin tech leader, dropping to 16% is, well, it's alarming. It really damages that narrative.
It really does. And it's not just the percentage, it's the actual profit per car, isn't it? That number's also taken a huge hit,
Huge. It went from something like $13,000 per vehicle back in 2021.
which is incredible.
Incredible. Down to only $5,700 in the second quarter of this year. That's less than half. That's the physical result of slashing prices.
So the money's draining out with each sale, relatively speaking.
Right. And it's not just the balance sheet suffering. It's the brand identity, this constant discounting, this margin collapse. It dilutes that premium image. As one long-term investor put it quite bluntly, Tesla is becoming more and more like Toyota rather than Mercedes-Benz.
And that's a fundamental shift. When you go from aspirational tech to maybe just another car brand fighting on price, the magic fades.
The premium evaporates.
Okay, so we've seen the product issue, the financial strain, but underpinning so much of Tesla's value, arguably, is the tech promise. Full self-driving, FSD. And that brings us to crack number 3. The secrecy, and frankly, the safety concerns around FSD.
Yeah, FSD is central to the bull case for Tesla, but the actual reality of its capabilities, it's kept very quiet, shrouded in secrecy, as some reports say.
And the company itself has admitted it, haven't they? Said they'd suffer financial harm if their detailed FSD crash data got out.
They have. Now, their official line is protecting competitive R&D, trade secrets,
But analysts are skeptical.
deeply skeptical. The prevailing theory, or maybe concern, is that the raw data would show the system's current limitations more clearly, that it might prick that bubble of perception, both with the public and investors. The true, reliable autonomy is just around the corner.
And here's where the analysis got really interesting and a bit concerning for me. Specific user reports are alleging something quite specific about how it fails. The allegation is that the system might be designed to disengage just moments before an impact.
That is. Yeah, that's a serious allegation. If true, think about the implications.
Legally, statistically.
Both. By disengaging right before the crash, the system itself isn't technically in control at the moment of impact. So the legal blame shifts back to the human driver. And statistically, it makes the FSD system look safer in the reported numbers because those crashes aren't logged against the autonomous system.
So it potentially masks the true failure rate.
That's the worry. It could be a way to present better safety metrics than the real-world performance might actually justify. Serious questions there about transparency.
Okay, if the core tech is facing these kinds of questions, it perhaps explains some of the strategic decisions or lack thereof, which brings us to crack number 4. This one's internal. A shift in leadership focus, specifically away from the core car business.
This is critical context, I think. Internal sources are suggesting that Elon Musk has, well, maybe lost interest in building cars.
Lost interest in the business that made the company.
His focus, according to these reports, is now intensely on a much grander vision, something called Master Plan Part 4.
Okay, Master Plan Part 4. What does that involve? Is it still about cars?
Not primarily, no. It seems to be much more about generalized AI, humanoid robots, Optimus, and, of course, his space ambitions with SpaceX. In this new vision, the car business, it's been sort of relegated.
Relegated how?
It's described as moving from being the core protagonist of the Tesla story to more of a cornerstone,
A cornerstone.
Yeah.
Supporting what, exactly?
supporting the bigger ambitions. It serves two main functions now, it seems. One, generating massive amounts of real-world data from the FSD fleet to train the AI. And two, perhaps even more crucially, generating the cash flow needed to fund these incredibly expensive ventures into AI, robotics, and space.
But that sounds risky, doesn't it? If the car business itself is struggling, like those margins suggest.
Then the cornerstone is weak.
Right. And the whole grand vision could collapse if the funding source dries up. Is that a recognized risk?
It seems the board saw exactly that risk. Our sources detail this new 10-year compensation plan for Musk. It's being described essentially as a golden leash.
A golden leash to keep him focused.
Exactly. It ties his potentially enormous payout directly to hitting very specific, very automotive-heavy targets. We're talking delivering 20 million cars, operating 1 million robotaxis, even delivering 1 million humanoid robots eventually. It's a mechanism, really, to try and anchor him back to the core business that actually pays the bills right now, forcing him, in a way, to make the car business succeed to fund his other dreams.
That's quite a dynamic. Managing a visionary leader while trying to keep the current business on track. Fascinating internal pressure. Okay, that leads us to the final crack, number 5. This one's external. The competition. It's heating up, isn't it?
Oh, intensely. Tesla had the field almost to itself for years, a near monopoly in desirable EVs. But now, it's facing what some analysts call a coordinated assault.
From all sides.
Pretty much. At the budget end, you've got Chinese automakers like BYD being incredibly aggressive, launching EVs under $10,000 in some markets, offering crazy deals like 0% financing. That puts immense pressure on the low-end market Tesla tried and seemingly failed to capture effectively with those stripped-down models we talked about.
So they're getting squeezed from below. What about the high end, the future tech, like robotaxis?
That race is getting crowded, fast. This was supposed to be Tesla's ace in the hole, justifying the valuation. But now you have serious players like Lyft, Mobileye, even Japan's Marubeni, all publicly stating plans to launch their own autonomous vehicle services, some targeting late 2026.
That's soon. That directly challenges Tesla's timeline and their assumed lead, doesn't it?
It absolutely does.
Right.
It means they might not have that lucrative market all to themselves, even if FSD eventually reaches that level. The competition is right there.
And on top of the direct competitors, are there other external factors?
There are mentions of internal distractions possibly impacting external demand. Musk's very public activities outside of Tesla, his political statements, the bid for OpenAI. Analysts suggest these might be actually damaging the brand for some consumers. And there is some data pointing to demand softening in key markets like California and parts of Europe starting around 2023. Hard to prove direct causation, but the correlation is noted.
Okay, so let's try and connect all these threads. If we step back and look at the bigger picture, what does it tell us?
Well, connecting it all, you see Tesla standing at a really precarious crossroads. It's not just one thing. It's this mix, this confluence of issues. A product strategy that missed, severe financial pressure from those price cuts, eroding margins, lingering questions about the core FSD tech, a potential leadership drift.
And now, this pincer movement from competitors on both price and future technology.
Exactly. And the striking thing, the central paradox maybe, is that the very things that powered Tesla's incredible rise,
Aggressive pricing, the revolutionary promise, the singular vision.
right, those exact strategies now seem to be the sources of its biggest vulnerabilities.
Yeah.
They're not playing in an empty field anymore. They're fighting legacy giants and fast-moving new players, especially from Asia.
So the big dilemma then for you listening, for the market, for everyone watching Tesla is this. Can the company navigate these challenges? Can it reinvent itself again, recapture that revolutionary spark, and prove that Cornerstone, the car business, is strong enough to support the grand plan?
Or is it heading towards becoming, a more conventional automaker? Still significant maybe, but just another player fighting hard for market share in a very tough industry.
That really is the defining question for Tesla's future, isn't it? It will be fascinating to watch unfold. Thank you for taking this deep dive with us today as we examine the state of the Tesla empire. We really appreciate you joining us.